Well, good afternoon, everyone. I would like to thank Alma, in particular Gord and Susan and Clint for commissioning Informa to conduct this work. It's actually a very good time, in our estimation, to be doing this study, to take a step back and take a look at what the medium-term prospects are for Alberta's cattle and hog sectors. It's been, I don't need to tell people in this room, it's been a very tough decade between BSE, the 2008-2009 financial crisis, MCOOL, all of the things that have occurred in the sector over the last decade. However, it appears to us that we're at an inflection point in this, both in terms of the bottoming out of cattle and hog inventories, and in terms of some of the macro background to where the industry stands. In terms of the grain sector, we've gone from a period over the last decade where, partially because of ethanol and renewable fuels, we've really been in a period of deficit for quite a while. We've had record prices for a number of years. We seem to be turning in the crop sector from a period of scarcity to one of adequacy or even abundance in terms of the global picture and even the North American picture. And in terms of the economy, the macro economy, there's some things working in our favor as well. So it was fortuitous when we got the request for proposals back in November. We thought this was a very good time to undertake this study, and we were glad to kick it off in December. And in terms of the importance of this sector, it's not only important to people in this room. The cattle and beef and hog and pork sectors are the largest component of Alberta's agriculture and food overall industry, and so it matters to Alberta. It matters beyond just this room. As I mentioned, the study was commissioned by Alma back in December. We spent about 6 months working on it. Informa Economics led the study. We were glad to be joined locally by Sericon and also by Dr. Surin. And if there was any trouble saying encephalopathy earlier, I won't try to repeat Dr. Surin's last name, who helped us out on the economic impact analysis. The objectives of this study were threefold. Number one, to take a look at where markets are going, markets for cattle and hogs are going over the next decade. Number two, to take a look at industry profitability. And number three, again, for a broader audience, for broader purposes beyond just this room, to take a look at the economic impacts of the sector for Alberta. And in conducting this study, we did a combination of market analysis and industry outreach. There were a number of people in this room and beyond this room who were contacted and who either Informa or the folks from Sericon sat down with to get your opinions, take into account things that are going on into your businesses, and to marry that up with the market analysis. Just to step back for one moment, let you know a little bit about Informa. Informa Economics has been around for going on 40 years. We were known for a number of years as Sparks Companies. We do commodity market analysis and risk management advisory services. I'm on the consulting side of the company. We've actually, I may have a little bit of a funny accent as well. I'm originally from Memphis, Tennessee. We've got two people, one who's the co-head of our livestock meat poultry group, who's originally from Alberta, and another person who worked on this study who is originally from British Columbia, spent a number of years in the business here in Alberta. So for this study, we married up a combination of market analysis that's our strong suit, along with reaching out to people in multiple segments of the sectors here in Alberta. Let me talk a little bit about our market outlook, and I'll give you a baseline market outlook and then talk about some scenarios that we did, because, of course, in dealing with markets and looking forward over not just 1 or 2, but 10 years, there's a great deal of uncertainty about things that can happen over that time. As has been said by a person in the U.S. government, there are known unknowns, things such as the weather, that since we initiated this study, some of the dryness in Alberta is something that we couldn't predict, but it has flared up again. And then there are the unknown unknowns, or the black swans, that are out there. In terms of dealing with some of the known unknowns, what we did was to try to put some scenarios around where different key factors, how different key factors could play out. So in terms of where we are right now, the current status of the industry, on the cattle and beef side, fortunately, margins have much improved from recent years. In both the cattle and beef and the hog and pork sectors, if you look at breeding herds, we've been down to 20 and 30-year lows on breeding herds. And if you take a look at what's happened over the last few years, we finally got some good margins back in place. We think that we're basing that things are rebuilding in both Canada and the U.S. If you look at what's going on in terms of inventories, if you look, unfortunately for the processing sector, somewhat for the feedlot sector, if you look at the number of animals that are going through, that's down. We've got some retention, and we're finally in a phase of rebuilding after, again, what was a very tough phase over really about 12 years for the cattle and beef industry. In terms of the baseline outlook, we expect both major packers in the province to stay in operation. Not only that, but Harmony Beef is expected to start up later this year. That's according to them. So that's one of the assumptions in this outlook. However, it's a bit of a niche player, so it's not something that's going to move the needle as much as what goes on with the major packers. The world market environment, as far as what we see, is moderately positive. We've got a situation in the world market where, compared to 30 and 40 and 50 years ago, the pace of consumption increases and production increases in the world market for beef has slowed down dramatically. A lot of the developed markets where you look at the U.S., Canada, Japan, Europe, a lot of the developed markets where that are major consumers of beef, populations are growing slowly. The economy has steadied, and to be honest, for some of us, there's not a lot more we can put on our plates. That's the negative side of things in terms of the world market. The positive side of things is you're adding probably 0.5% a year of growth onto a market that's already very large. So the absolute amount of growth is still pretty decent. If you look, on the other hand, at world trade, at exports, that's continued to grow. It's even popped up a little bit in the last few years. So with Canada, and especially Alberta, being in an export position, this is a relatively good market outlook. We would like a lot stronger growth. If China was mentioned earlier, I think China is going to be more important for the pork industry than the beef industry, but any incremental growth that we get from China is going to be positive. However, in terms of both the cattle and the hog sectors in Alberta, in conducting this study, the story for both sectors is one of opportunities and constraints. And fortunately, ALMA and some other organizations are in a good position to be able to try to help work on some of the constraints. There are other industries out there where they don't have a central focal point. But in terms of the issues for Alberta, labor is a major issue. It's an issue at the farm level. It's a big issue at the packer level, both in terms of the number of people who are available and in terms of the foreign worker program. On the cow-calf side of things, which needs to be healthy for this industry really to advance, there's both the issue of the number of workers available and also some people taking the opportunity of the high cow prices in recent months to go ahead and exit the business. So we need to make sure to facilitate getting enough people into the packing plants and keeping enough people in the cow-calf sector in order to facilitate industry growth. BSE, as was mentioned in the presentation, that's a background concern, certainly nothing that we have any particular insights on, but it's something that is always in the background, needs to be managed in order to keep markets open. In terms of our outlook for the industry, we see Alberta continuing to gain an increasing share of Canada's beef cow herd, and that herd itself is increasing. As was mentioned at the very beginning of this session this morning, Alberta has quite a foundation of natural resources and industry infrastructure, and it's got a foundation to build on. So in terms of what Informa sees, in conjunction with some of the industry feedback that we've received, we see the Alberta beef cow inventories, the Alberta cattle industry, rebounding pretty nicely. We don't see it by 2025 in terms of the cow herd rebounding to quite where we were pre-BSE, but we see it rebounding pretty strongly. We'll continue to have some of the cyclicality that is always in the markets, but in terms of beef production, when we add this with increasing productivity of the herd, we're looking at a pretty good bounce back in Alberta and in Canada as a whole. One of the foundations for this is cow-calf margins. Cow-calf margins have been at record highs at times this year. We see them down only modestly next year. And going forward, we've got pretty good margins through the sector as a whole. What we would expect going forward, the cyclical nature of the cattle sector, we would expect things to be pretty good through the latter part of the decade. Then for things based on lower U.S. prices to turn against margins and prices again, and then recovery through the end of the forecast period. In terms of the hog and pork sector, there's a pretty good global macro story to tell as well. Unfortunately, the story for Alberta isn't quite as good. For the world as a whole, we've got somewhat higher growth in production and consumption than we do for beef. In terms of beef, you're looking at probably 0.5% compound annual growth rate on a global level. For pork, you're still looking at maybe 1.5–2% compound annual growth rate. You're also looking at a pretty positive export picture for pork. If you look at what's going on here in Alberta in terms of the inventories, we've also had a pretty severe liquidation that occurred through 2012. If you look at the cattle and you look at the hog breeding herds, the downturn is pretty painful. The good news is it looks like we're coming out the other side of that. Margins have turned positive. They were record in 2014, but industry equity has been hit pretty hard over the last decade, and we're still rebuilding. And if you look at what's going on in terms of prices and margins over the last 12–18 months, we've been on a roller coaster ride for that. So industry stability is still not there, but again, we think we're putting in a base. In terms of the constraints, even more constraints than for the cattle and beef sector. You've got the same constraint in labor as you've got on the cattle and beef side, but you've got two other particular constraints. One is in terms of industry infrastructure. There are not a lot of producers left, hog producers, in Alberta. The relations with the lone packer, lone large packer, are not great. And as one of our study colleagues, one of the folks on the study team, reminded us time and time again, the packer that's here in Alberta is a one-shift packer in a two-shift world. So it's pretty critical that one packer remain in operation, that not any more critical mass be lost, and that the ship get turned around relatively quickly. Another thing that is affecting the sector, though, is the availability of credit. There's not a lot of discretionary cash, discretionary equity from recent years for producers to be able to put back into the business. It's gotten better over the last couple of years, but still industry equity has been impacted. However, one thing that's been pointed out to us by more than one market participant is basically financial institutions have virtually no interest in extending debt and extending loans to the hog sector at this moment in time. So we've got a situation where we've got to keep enough hogs and increase the number of hogs that are produced in order to keep the packing, the lone packer in the province with enough hogs to go forward. On the other side of things, the ability to expand, the ability to rebound is compromised compared to the cattle and beef side of things. Another thing that's going on in the hog area as opposed to cattle and beef, in the cattle and beef side, Canada and Alberta are in this situation right now where trying to turn the ship back around, but if you look at other major countries, the U.S. is pretty much in the same position. Australia is still in liquidation mode. They're probably not going to bottom out in terms of their beef production for another couple of years. In terms of competitiveness, that's a good background situation for Canada to be in. If you look at the hog and pork side of things, the U.S., both in terms of some intentional expansion and something that's a little harder to forecast, but the bounce back from PEDV, the increase in U.S. production this year has been pretty dramatic. So Alberta and Canada are a little slower at getting out of the starting blocks. The United States has already fired out of the starting blocks pretty quickly. One thing that could be probably more favorable to the hog and pork side of things than on the cattle and beef side of things, though, is China. China accounts for about half of world production of pork, and it's a staple of the diet there. There is a big question as far as whether China can continue to grow, import feedstuffs, feed hogs locally, and be able to produce enough pork to meet its needs, or I should say come close to meet its needs, or exactly how much the increase in China's imports is going to be. We see China as trying to hold the line in terms of the amount of imports it's going to allow on the pork side of things. They're going to try to foster increased production domestically. We do see moderate expansion of Chinese pork imports, but that's the model that we see them trying to follow. If this turns out to be a case where they struggle to do that, they can't do it for certain reasons, that could turn out to be a greater opportunity for exports. Another potential opportunity is that for some competing countries, meeting their own domestic needs is going to turn out to claim a larger share of their own production, and so that could further raise the the amount of world trade, the amount of imports, and the opportunity for Canada. Again, the question is whether Alberta can take advantage of that. In terms of the way forward, we see Alberta's share of Canada's overall hog and pork production staying pretty much flat. We see Canada's overall inventories, hog inventories and pork production. We see the hog inventories coming back somewhat. Sow inventories will come back modestly. However, in terms of pigs per litter and in terms of the amount of pork produced, the efficiency and productivity of the herd is going to allow that to rebound. In terms of the total hog inventories, we see that coming back. Again, not anything like it was in the early 2000s, but coming back pretty strongly. As I mentioned, we also conducted a couple of scenarios because there is uncertainty out there. There are a number of things, both from a market standpoint and from external standpoints, that can happen that, quite frankly, mess up even the best of forecasts. So what we try to do is bracket where's a high side and a low side of where we might be. And we didn't try to pick the absolute best case that could occur. We didn't try to pick the absolute worst case that could occur. What we did is we tried to assemble a high margin scenario. What are some factors that could come together that could cause margins on both the cattle side and the hog side to be substantially better than our baseline outlook? On the other hand, what are some factors that could come together to cause margins, a low margin scenario, margins to be substantially worse than our baseline scenario? Some of the major things, one is purely macroeconomic, and the folks in this room, to my knowledge, don't have a whole ton of control over it. It has to do with the overall economy, the energy sector, how prices rebound there, how production strengthens there or not, and most importantly for the sector here, what exactly do exchange rates do? It was tough for the industry. One of the things, along with having to deal with BSE, the financial crisis of 08-09, the period of time when the Canadian dollar went to parity with the US dollar, that was pretty tough. So in terms of a high margin scenario, even though it's implicitly a little bit more negative for parts of the Canadian economy, one of the assumptions is that the Canadian dollar moves to 70 cents against the US dollar. Part of that is labor conditions improving. One of the things that needs to be taken care of is the foreign worker program and labor conditions at least being enough to allow the two major packers to continue to operate with some efficiency. Mandatory country of origin labeling in the U.S. being repealed. We saw the House do that, House of Representatives. Recently, it's going to be a bit more difficult to get the same response from the Senate. The Senate's probably too close to call. A lot of people have pretty much given up the ghost, and a lot of the leadership realizes this has to go. Debbie Stabenow from Michigan, she appears to be holding out, but I think the likelihood is that the MCOOL situation will improve, if not getting completely repealed and resolved. Because of the importance of exports to the sector, improving market access through bilateral or multilateral agreements, no serious disease incidents, and again, the major packing plants on the beef side stay operating. On the low margin scenario, a move back in the exchange rate to parity with the US dollar, labor continuing to be a nagging major constraint, both in terms of production, especially on the cow-calf side, and in terms of the number of workers that are available for the packing plants. Feed competitiveness being an issue, MCOOL not getting resolved, trade access to other countries not being improved as much as some major competitors. And it's important to note that for the low margin scenario, what we wanted to do is take a look at, there's been talk over time, what would happen if one of the major beef packing plants were to close? It's assumed that would happen around mid-period. There's no great ability to forecast that. In terms of beef cow inventories in Alberta, again, the baseline was for a pretty good bounce back, but not a bounce back all the way to pre-BSE levels. For our high margin scenario, where you've got the dollar at 70 cents, you've got good trade access, no disease incidents, we could see a substantially larger bounce back. This depends, again, on the industry being willing to invest, being able to spend money on expansion. On the other hand, if a major packing plant were to close, make no bones about it, the industry would continue to go into decline after that occurs. Basically, we have to have that infrastructure in place. In terms of the hog inventories, again, we didn't make a major assumption about a packing facility closing. The expected expansion in the industry, the ability to expand on the high side, is not quite as much as for the cattle and beef sector, so we see a relatively more compressed set of outcomes. It's for a rebound, but there are going to have to be some real things that occur in the hog and pork sector for it to rebound any more strongly, and we just see structural constraints keeping it from doing that as far as what we can currently see. In terms of taking a look at what is the economic impact of the sector, and talking to people who aren't familiar with the sector and talking to politicians, there's a new party in power here, getting people to recognize the importance of this sector to Alberta's economy, that was a substantial portion of this project, and one of our colleagues went through a process of modeling that. If you look at 2010, which is not a great year to start with because energy was thriving in terms of the cattle and hog sectors, we were about at the bottom of the cycle, the bottom of the barrel. Still, we accounted for about 2.5% of GDP, 3.5% of personal income, and 4.5% of employment in Alberta that year. Those numbers might not be that impressive, but if you look at the billions of dollars and the thousands of jobs that were involved, that's a little bit more impressive. GDP contributed about $7 billion. Employment, in terms of full-time equivalents, and this is not just direct employment, these impacts are direct, indirect, all the ripple effects that you have through incomes, et cetera. Had about 96,000 people employed as a result of the activity in the sector. 2025, under only the baseline, more than a 50% improvement, expansion in the GDP contribution to over $11 billion. In terms of employment, because of improved output and because of improved pricing, there's a multiplier effect on that. 156,000 jobs directly or indirectly associated with the sectors. So an increase of 60,000 jobs over time. Any government official is going to take note of that and be happy about that. Let me just flip quickly to the difference in the impact under the high, medium, and low scenarios. If you look here, you can see exactly how important the beef packing and processing industry is to the overall economic impact of the sectors. It can get even better in the high margin scenarios. Hog production and pork packing and processing relative to the beef side is a lot more constrained. It's more important to keep that there, to build from that, and to keep critical mass. But the opportunity is certainly on the beef packing and on the beef side. If you look at the difference between the high margin and the low margin scenarios, because of the closure of one of the plants, you've got a difference of, it could be as good as $7.6 billion of GDP contribution, or only a third of that at about $2.5 billion. One quick thing in terms of the multipliers, you've heard about this. If you look at the multipliers for GDP and for employment, you're generally talking about, for every dollar of GDP, direct GDP impact, or every person employed, a 2 in terms of a multiplier means one more person would be employed, or one more dollar would be created. One of the things to look at for packing and processing is your multiplier on GDP is about 2.4. Your multiplier on employment is about 4.9. That can work toward the positive if that's supported and there's expansion. If we lose a packer, that can work toward the negative as well. In terms of conclusions, there's a solid foundation in the province. Profitability and the market outlook are positive, are favorable for expansion. There is some concern since we started this study about the dryness that's occurring this spring and summer. Key constraints: labor, and especially for the hog sector on the financing part. The hog sector rebuilding we expect to be more constrained than the cattle sector. Government action, staying engaged with government, especially about the labor issue, is very important to the sectors here in the province. But the contributions of the sectors, especially on the cattle and beef side, are great enough to merit continued engagement with the general public, and especially with politicians. Thank you very much.